Hey everyone, I wanted to go ahead and take a look at the spider trading action today. After yesterday's post, I got word that the ES mini futures were crashing, and I was like, oh yes, we're going to have a huge down day tomorrow. But by the morning session, um, most of it had been recovered, and we opened pretty evenly from yesterday's close. We had a good down strong move early in the morning, but it spent most of the day recovering. And we closed at around 205.70, but we got as low as 204 and a half, and I was hoping we'd touch 204. So there was a lot of buying to support it a little bit higher up, which, if you think about it, could be a higher low. We're not sure yet. We got to see tomorrow's trading action in a couple more days after that. But I'd made an interesting observation, and I don't want to put any value into it except as an observation, that this price here has served as seems like a swing, a pivot point for price movement. What I mean by that is there's a lot of support and resistance in this area. For example, today we closed near this area. Here, it was served as resistance on these two candles, but when we dropped here, it served as support. And then here we had a support here on these two candles. This one dropped below but closed above, and this one touched but went back up, bounced back up. Let's see, in here we had support area. Here it served as support. Here is where things got interesting. These three candles, it was serving as resistance, and then we broke out above this kind of 3-day resistance. And then that's when we had a lot of market volatility all around this price point. We had a little bit up, big down, big up, big back down, and just a whole lot of market volatility around this particular price point. What's the significance of that? I'm not sure. It was just an interesting observation. Maybe it'll become more obvious later on what that price point represents. But in any case, what I want to talk about next is how to protect your trade. Once you enter into a trade, probably the first 3 days is the most difficult time to hold your trade, because there might still be some volatility, some reluctant bears or some reluctant bulls, depending on what type of position you're taking. They might still go back and forth at creating a lot of volatility. So you have to know your exit strategy. One of the things that I talked about was the lower highs. So as long as we're making a lower high, we should be in a downtrend. However, let's say, for example, you're holding a profit right now. You don't want to go back to this lower high and lose that profit. So we want to try to minimize our risk. If we can, we want to take some profit a little bit early on, especially on this kind of price action where we had a lot of strength. We don't want to have another gap up here and put us in a position where we get back into a loss scenario. So I want to give you guys some ideas on what we can do tomorrow. If, for example, we get back in the 204.5 area and we break this low, that's great. That's kind of confirmation that the move might continue. But you want to start considering taking profit if we make a move back into this area, considering how much strength it's showing just on this candle alone. So you can take the profit, and if we do head back higher, you can consider reshorting your position. The other thing is that we have had enough days and points where we can actually go ahead and draw a downtrend line. So that would be our downtrend line. It's a nice 45-degree slope, and if we go ahead and clone that downtrend line, we can guesstimate our down line, our bottom channel line. Now this is a bit of a narrow channel, so it might widen up by breaking down below it and then going back up. But as of now, this would be our downtrend channel. If we, for some reason, hit this downtrend channel line, it's a good opportunity to take some profits and to re-short at the upper channel line. If for whatever reason we go ahead and break this downtrend line, meaning price pokes up its head above, that's an opportunity to reconsider the trade and take a look if we would want to exit it. The break of a downtrend line is typically a reversal signal. It shows that there's more strength than anticipated, and it might continue higher, and we don't know. So if it does break the downtrend line, that's a signal where we might be able to exit earlier, still have a profit before hitting the lower high. If we exit here and we get back here and we see a lower high, we can think about re-shorting. But let's protect our profit. Let's protect our gains, or at the very least, break even. The other thing to take a look at on the hourly chart, we've had pretty similar action here. We broke down to the 204.5 area, and then it bounces and consolidates. Again, we break down to this area, and then it consolidates. So that's a very interesting similarity. Now, we also had much higher buying volume here and much lower buying volume here. So that's a bit positive. We also had more selling volume here. But just in case we're wrong and we want to protect our trade, we want to take a look at this line here, this consolidation area, and make sure if we don't get above it. So it may poke its head above it, but if it closes above it, then we want to make sure we consider reevaluating our trade. You can close your position here, and most likely if it goes above here, this is where it'll get re-challenged, and we'll look to be able to short a little bit higher up. Now you're going to have to be a little bit nimble to be able to do all of this, but it's something to consider if you have the opportunity to watch it intraday. So, protecting your trade, even with a little profit, is a lot better than having it reverse and start going negative on you and not sure what you're doing. But the final, no compromise stop would be right here at 208.57. But the lower your risk, the better it is. So there are some points here you can take a look at and consider in protecting your trade. So that's it for this video. I hope we do continue the downtrend day due to the shortened trading session and options expiration. I wouldn't be surprised if we closed in a very tight range, or we trade in a very tight range. And if we do, it's really hard to have a new trade that you want to hold over the long weekend. So, you have to consider, if you have some profit, possibly to take some profit off before the long weekend. Anything can happen over the weekend, and the stops, they don't work when there's a gap up. So that's the one failure of stops. So if you had a stop here above this high and it gapped up here, there's nothing you can do to protect your profits. So the only way to do that is before the closing bell. So just some things to think about. Once we get 3 more trading sessions, we can really see if we continue lower, then we can really set a stop and let it run as far as possible. But the first 3 days, the first thing you want to do is protect the trade. So that's it. If you liked this video and you thought it was educational, go ahead, please help me click on the like button. If you want to follow up with future videos, please click on the subscribe button and you'll receive notifications when new videos come out. So I appreciate you guys watching. Thank you.